Welcome back, financial investors. My name is Brent, and today we're going to be doing our Monday buys video for the very last week here in July. We are going to be taking a look at the M1 Finance Roth IRA, making our deposit of $115.38, allowing us dollar cost average. We're also going to be taking a look at our 1 week performance last week, what stocks were up, what stocks were down, our overall performance. I had a lot of activity last week. It was one of my most active weeks last week where I sold and locked in profits on 3 companies, basically 5, but 3 of them primarily stayed in my portfolio, whereas I did leave 2 positions completely out of my portfolio, sold out of them, and moved funds around within the portfolio in order to get sort of situated for the remainder of 2019. So with that said, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, and real estate. If you're interested in any of those topics, definitely hit that subscribe. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions yourself, drop them into the comment section. I do read and reply to all your comments. If you'd like to share some information, etc., do so, and let's go ahead and get into the video. So what I'm going to go ahead and do here is go ahead and flip my screen around, and we're going to start off by looking at stock futures first. Now, stock futures right now, it's currently Saturday for me. It's Saturday, well, Sunday, I guess. It's 1:06 in the morning, Sunday. So we still have Sunday to kind of move news either up or down. I have several positions that are situated in other portfolios set up for Monday, but I haven't taken a look at my portfolio here for this week, but I sort of already know what I want to buy, but we're still going to be doing some other additions. Right now, stock futures are looking negative. That is primarily because we ended Friday fairly high. We closed with the S&P 500 and the NASDAQ hitting new record highs. Now, depending on how earnings plays out this week, depending on how the U.S. and China trade talk comes out this week, going over what the Fed actually does on Wednesday, we have a lot of uncertainty and volatility that can take place this week that can either move the market higher or it can move the market lower. This week, it's sort of about, right now it's 50-50. I have no idea what this week will actually play out to be. It could end up being red or it could end up being green. We shall see here towards the end of the week. Now, jumping into the M1 Finance Roth IRA portfolio, we can see here overall, this is cash, what is it called? Money weighted return. We're up slightly from last week. We've made some of a recovery back. This is up 17.25%. We have a guaranteed lock-in of $484.86 that we have actually earned in dividends. Now, not all of that has actually been paid out into the account and allowing us to buy back shares, but it is going to be upcoming or has been paid out in the account. We also have some market gains there of $1,010.30. Now, market gains, that can fluctuate, but dividends are absolute. Those are cash profits that we have been paid out into the account that are able to buy back more shares that allow us to get paid more dividends, and those dividends increase their dividends yearly, and those dividends that are increased yearly also pay out and continue to buy back shares. It's a very nice cycle. So I aim for continued growth in my dividends, and we have had a lot of that. So in our 1 month recap here, in just a few days, we're going to see the dividends in this portfolio has grown substantially during the month of July. So we have broke to all-time highs here on Friday. We closed Friday at $15,929.54. Now here, let's go ahead and swap this to the week. We started Monday with about $15,698.73. We had an increase there on Monday. This was due to the equity add that every Monday we add $115.38, averaging into our portfolio, dollar cost averaging every single week over a 52-week period, allowing us to max out our Roth IRA for about $6,000 every year in the year statement. Now, from Tuesday, this market continued to chug higher. There was a bit of a pullback here on the 25th, and that was Thursday. The whole market was down here on the 25th. So here, a little bit of news coming out that overseas and such at the Fed, we had some strong economic numbers, which means maybe the Fed may postpone cutting rates as others were expecting to take place next week. And that kind of caused the market there to fall across all the other indexes. So that also affected my portfolio. Friday, we sort of continued and ended the week here up 1.08%. We made about $166.50 in market gains, and we went through an ex-dividend last week. That is going to be paying us out. We've earned $3.55. It has not been paid out into the account, but we have earned those dividends and they will be paid out here in the future. Now, as far as companies that performed or underperformed, we had several that did really well. Stanley Black & Decker is my winner last week, up 7.7%, followed right behind by AT&T, CenturyLink, Avery Dennison, Essex Property Trust, Kellogg's, and so on. A couple of these financials in here also doing really well. Eaton Vance and JP Morgan are a couple of my two financials here, 1.71, and Eaton Vance up here, 3.39. Some of our real estate investment trusts here that we've been adding to the portfolio recently or have had in here have also bounced back. They've been kind of getting hammered these last few weeks, so it allowed me to kind of dollar cost average into them. And then some of our losers. So AbbVie came out, they beat earnings, they beat revenue, they guided higher in their expectations, and they popped about 2% on the day on Friday due to their earnings pre-market, I believe. And while they did pop, they did not hold that gain. They went from about $66 up until the $69 range, but they continued to kind of sell off through the remainder of the day and actually ended up for the week down about 0.35%. 3M, I believe their earnings were not well. I'm not sure if they have actually done their earnings. If they haven't, I wasn't paying too much attention with 3M at this point. Consolidated Edison, I believe they pay out earnings here in the future. Chevron, they pay out earnings in this upcoming week. Las Vegas Sands came out with earnings, didn't do so well, down 1.3% on the week. Caterpillar down 1.72. Cisco down 2.17, and Digital Realty Trust. My biggest loser this week was Digital Realty Trust and Cisco. They're down about 2% or 5%, but because we had so many here in the positive, it just offset all those losses, and that's what kind of kept us there in the green. Now, we had a return there of 1.08. The market made a return of 1.65. The Dow Jones up 0.14, and the NASDAQ did a whopping 2.26%. So this portfolio here, while it didn't beat or exceed some of the indexes that beat the Dow Jones, it didn't quite keep up with the S&P or the NASDAQ, but that's why I have a mixture of several different portfolios. This portfolio here before you is just one of about 5 or 6 different portfolios that I track in order to kind of stick them together and track the progression of a week to week basis, a month to month basis there. Now, going over into the activity, again, this is one of my most active weeks this week where I made my deposit on Monday, and generally I have a deposit, I have a few dividends that get rolled in. I may reinvest my dividends, and then the following week I have a deposit, and that goes through the cycle here. I make a deposit, have some dividends that get paid out, and I reinvest those dividends. But this week we had some trading taking place. On Monday, the 22nd, we made our deposit. We bought one stock last week. That was Tanger Factory Outlets, ticker symbol SKT. We came out and purchased that on Monday. Now, Wednesday, I saw the market beginning to, I wanted to take a few profits. I made a whole video on Friday on why I decided to take profits on 3 of my positions. And on Wednesday, I started to initiate those buys and sells. So I sold and locked in profits on I was supposed to sell them on 3 companies. I was supposed to sell about $76 on Apple, $125 on Cisco, and $41 on Kimberly-Clark. I accidentally hit buy on Kimberly-Clark for $41, and all of that equity that I was selling and locking in profits was supposed to move all into Cardinal Health for about almost $200 of equity, move it into this position, increasing my overall position in this company, because right now Cardinal Health sits down in my portfolio just a few percent there. Cardinal Health here. It sits down in the portfolio around 6.61%. By taking equity from some of my losers that are hitting some resistance and trading at near 52-week highs, and moving that into some of my positions that are sort of on their maybe like a lower level right now from where I initially entered into them, I'm able to lower my unit costs, increase my yield on costs, actually increase my dividends by taking profits and moving it into some of my other I don't know the whole word for it, but just not performing at this current time. But in the future, Cardinal Health is a strong company, and I have no worries that this one will recover here in the future. And by just adding that equity into it, that got it to a position that I want it within the portfolio. Now, jumping back and continuing on, because I did make that accidental buy in Kimberly-Clark, I also had a dividend here, 443 on Wednesday, getting paid out by Cisco. So again, because I made that accidental buy within Kimberly-Clark, I sold out of my $44 that I accidentally had bought, plus I wanted to sell out of my actual $44 that I wanted to sell out of. So what took place here, let's go back here. I wanted to show you one thing here. Now, I bought Kimberly-Clark here at $134.92. It was 0.3529 shares. Now, when I decided to sell this company, I sold it for $135. So I had bought it for $134.92, and I sold it for $135.69. So I actually made some profits on that. I wouldn't consider that an actual swing because I wasn't trying to swing it. Now, the other positions that I completely closed out of are Medtronic and Coca-Cola. These were two positions that this was all the equity that I had added into these positions. Actually, Medtronic, I'm not sure if that one actually is still within the portfolio. I'm pretty sure that one's out now. Medtronic, I don't see it in there. So I completely sold out of that position. Now, the reasoning for selling out of both Coca-Cola and Medtronic is that these were very small positions. They are up 16% from where I initially bought them, equity-wise. Plus, they've also paid out some dividends while they were in my portfolio, making their actual return a little bit higher than 16%. And I do not plan on adding any more equity into these positions at this time. So instead of leaving that equity to sit there, also hitting at some 52-week highs, both of these were overextended here in the short term. I decided to sell these out of my portfolio and move these funds elsewhere. So I sold off about $241 of equity from positions that were positive, and I moved them into positions that were either negative or that I wanted to increase my equity position in. And I moved $50.77 into Simon Property Group. This was a position that was down in my portfolio, roughly 6 or 7%. And by moving equity into here, it allowed me to lower my unit cost, increase my yield on cost on SPG, and basically overall increase my dividends going forward because I sold out of a few positions here and moved it into Simon Property Group, which currently offers a slightly higher yield what these ones are currently offering. Now, I did not leave my position here in Kimberly-Clark. I still have a good portion of equity within that one, and also Tengri Factory Outlet. Now, I did another buy here. So this was from Cisco. Cisco, I had some cash again sitting there from Cisco, $4.43. Looks like Medtronic also paid me out 45 cents there. So that position was so small from Medtronic that it only produced me about 45 cents every quarter. So I just decided to kind of sell that off and move it somewhere else where it would be more profitable. It would make more sense for me. And I reinvested that $4.90 back into Simon Property Group there on Friday. So that is the quick recap of all the activity within the portfolio here for the week. Now, here comes where I'm going to be making my buy this week. Now, we can see here that I have a few positions here still in the negative. Simon Property Group, Johnson & Johnson, Cardinal Health, Caterpillar, Triple M, Altria, and Avi. Now, I am looking to still build up my Tengri Factory Outlets. This is a position that I recently added to my portfolio. It was a very small position. I don't add a whole lot of equity in every week. So when I do add equity in, I want to make sure that I focus and target these specific companies that I believe are beat down here in the short term, but have much more upside potential. Tengri Factory Outlets will go earnings here on either Tuesday or Wednesday, and we shall see if this company will fall or go higher. And it also goes ex-dividend here on Wednesday as well. So there's a lot kind of going on this one. And if it does fall here in the short term, that is fine. I can still add more equity into this one to get this to about a $700-800 position within the portfolio. and then I will leave it be, as some of these other positions are also in the $600 or $700 range. So what I'm going to be doing here is, by selecting Tanger Factory Outlet, I'm able to go in here and make a specific buy towards this company, and I put in $115.38. I don't know if I have any dividends getting paid out here on Monday, but I'm going to go ahead and target 125 and confirm that. And that is going to be my Monday buy. That is going to put me up about let's see, what was it? It is going to increase my unit cost because this position is actually higher by about 3%. It's going to increase my unit cost. It's going to decrease my actual return here because this is money weighted. I'm adding more money. My yield, my return will fall. And this one, overall, my current average share price is $16.38. It is currently trading at $16.58. It went down roughly 0.5% there on Friday. Hopefully, it continues falling down. Maybe when I make my buy here on Monday, after hours, it looks like it went up 0.42%. So it's probably anticipating some movement going into earnings here. So that is basically it for today's video. Again, that is what I wanted to cover today. I covered the M1 Finance portfolio, the activity for last week, what stocks paid out dividends. Cisco paid out some dividends. Medtronic paid out some dividends. It was a pretty active week. If you haven't watched my video on Friday, go watch it. It covers what stocks I looked at, why I sold out of positions, and why I decided to keep other positions that were trading at all-time highs, and kind of go over that. So that concludes today's video. If you guys are brand new to the channel or just have not yet subscribed, I would highly appreciate if you do hit that subscribe button below. Again, I cover the stock market, dividends, and real estate. If you do enjoy this video, find it helpful with a thumbs up. And if you have any comments, questions, going over today's video, stock market, dividends, or real estate, drop it into the comments section. I do read and reply to all your comments. And thank you all for tuning in. I will see you next time. Have a great day. Bye.